The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Monday night here in Asia, Monday morning, I'm assuming, in the U.S. Let's take a look at the 10-year really quick. A little technical difficulty trying to call in this morning, so I apologize for that. I think we've got everything ironed out. A lot of moving parts when it comes to putting this show on. 127.11, weekly unfair lows. There we go, folks. Couldn't get a close below there last week, and we're starting out this week kind of rattling around these inflection points. If you watch this show, I'm still not a huge fan of the Treasuries selling off in any big way yet. So that's kind of Custer's last stance on the 10-year. Got to pay attention to it. Last week had a lot of gyrations here, but look where we closed. Still not the harbinger of bad news for the notes yet. So 127.11 is going to be your maximum support. On the 10-year, we obviously have slid down on the June contract here. Let me just kind of put this into perspective. But, you know, the good news is for longs, you've also got a new demand area that's appearing right now as we speak, 126.29 and a half. Let's just call that 127 rounded off on the bottom. And that's obviously lower than that weekly inflection point we just spoke of in 128.21. So what does that mean? As we are landing pretty much smack dab in the middle of a new profile, kind of non-directional, not a lot of leverage either way. So we're going to kind of go back up into the longer-term time frame, this 127.11, and just pay pretty serious attention to that, as we always do. Remember, weekly takes precedence over daily on down the line. And down the line means 240, 60, 30-minute, things like that. That's why a lot of our automated systems, we talk about this a lot, we base them primarily around the longer-term inflection points and then try to use the lower time frames to try to guide us through afterwards. Now, there's a lot of combinations you can use to trade our profile technology. I like some of the things that Tommy Ryan's doing right now, some of the things that Steve Rhodes is doing in somewhat enhancements to the profiles. I like to keep it as simple as I possibly can. And that's just the way I use them. And we've got some other indicators that we look at periodically, namely Navigator. I try to keep it simple and not throw too many things at the board at one time. And right now, you know, we've got to pay attention to one thing on the notes, in my opinion. You're still in a defined uptrend on a long-term basis. And by the way, we've got a massive support area on 127.11. Now, we got through that unemployment report. We obviously, you know, notes and bonds loved it. S&Ps loved loved the idea of the notes and bonds rally, and we're going to go right into these S&Ps after saying that. And what we had talked about last week, if you're just joining up this week, is we took a look at our scanner. We're looking at our S&P breadth here. We're going to go back into these are our ETFs here. We're going to pull up our indices, and we're looking at our intermediate time frame on ranking our breadths here. And I've got a new version of this with the most loudest colors I've ever seen. We're going to try to calm that down. But as we look at this breadth was flip-flopping around, and we were negative, and we closed Friday barely positive on the daily, and that's just still concerning to me. You know, we always talk about where's the leverage, where's the place to pick battles. You know, is there any bias around some of these inflection points? So let's just walk you through what we were thinking. Now, we had caught some offers on the way down based on the 240s. And why did we do that? We took some shorts, and we took a short attitude. This is our daily chart, by the way. We took a short attitude about the middle of last week as we were trying to look at some lofty areas to try to get back down below as far as inflection points go on the short side. Now, we have been regularly stating above this daily profile that it may be the riskier trade to be long here. So we've been opting out on these bounces, which looking back in time have just looked pristine and at no fault as we come down into this 2068, 2063. Why 2063? That weekly unfair high coupled with the daily unfair high. There's a little bit of a DMZ, as we like to call it there. But we've been passing on these bounces. We've been trying to trade this down into these areas, again, waiting for some conviction type situations to unfold. And as we had talked about a target rich environment down here at 63 to 68, and we talked about, we've reached our targets. We got to sit on the sidelines. We got an unemployment report coming out. We kind of did a little bit of a sympathy bounce around these inflection points here, and then the report came out. So now that you know the history and you know our thought processes, we were actually looking at, there's no new information on the dailies. We're going to have to take, and this is what we were talking about, we're going to have to wait until after the report and wait for some possible breakdowns below inflection points like we had last week to try to grab some of these shorts on the way down. Breakdowns below profiles, remember? And then when we kind of got above this one after the report, you want to trade the reaction, not the action. You don't want to be a Kramer and throw the dice right before earnings announcements or major economic reports. That's just very, very dangerous in our book. So as we look at this now, fact of the matter is we're going to have to get below 2103, 2104 now to start looking at this from the short side and start utilizing the weakness in the breadth situations that we look at, the daily, namely. And again, this thing's actually getting a little bit more bearish as we speak. This is basically not a market internal data situation that you want to hang your hat on for longs. I mean, it's a to some degree balanced marketplace from as far as the internals go. And what does that mean? Balanced marketplace. That means that this particular last move up doesn't have all the internal type mechanisms going on that you want to see from a market that just is really taking off, so to speak. So, do I expect this to sell off? Do I expect this to rally? I think the expectations of it to rally are really the riskier stance to take. If we get some confirmations and some situations that we can, kind of grab onto and more importantly, put stops around, that's what we want to look at, in my opinion, on the S&Ps, and that's based on, not a lot of fanfare going on in the internals. And I apologize, guys. Let me put this Skype out of the way here. All right. So as we've looked at the S&Ps, we've talked about some inflection points. Let's just kind of give some situations on the NASDAQ. And again, we were looking at the NASDAQ sell-offs below 44.63, rounded off. That's worked out great. We talked about targets down below 43.70, overshot a little bit. And now we're coming back up into these more powerful intermediate inflection points that we've got to pay attention to. Now, we reached it, backed off on Friday. We're coming up into it. We don't have this situation in the S&Ps on our intermediate or dailies here. So unfair highs 44.62, 63. We've got to put stops oriented around those. We've got to have some, help with our breadth. But, as you look at the long term, we made lower highs down here on our navigator with this last rally up relative to the previous highs that we made around the 1st of March. So we've got some things in our favor. I'm still a big fan of trying to find areas to short this, waiting patiently until the market comes to us, of course, orient the stops around and staying away from that what might be called the riskier trade on the long side. So let's take a look at the Shanghai as we kind of are perusing the usual suspects of the global world here. This is the situation with Shanghai. Not a lot to hang on to here. We've had a pullback, but we've had a kind of a snapback rally here. Here's the situation that I really wanted to point out. This is our long-term Shanghai, right? We've got a weekly box that appeared below, and that happened today. And that is, as we know, if you've been watching the show ever, profiles appearing below price action are very bullish, and profiles appearing above price action are relatively bearish. Do you have anything to hang on to here on the long term? No, I just think you've got some new areas to basically play stops around. Now, the thing that I think that is possibly the way to trade this I'm going down in our 240s. Now, trading this on the intermediate, the weekly and dailies, you got to have a pacemaker put in more than likely, because you've got a lot of volatility. When you strip it down and just throw it into our shorter term time frames to kind of mitigate some risk and orient some stops around, look at these nice little situations on the Shanghai you've had. Again, green being our Vega north trade, red being our south trade, and then we're kind of back in go-go north mode again above that 4222.45, just to show you how this works. So I see we're going to come up with a break here. We're going to talk about a couple more global indices. We're going to hit a couple of currencies that seem to matter, and then we're going to get into some equities a little bit later. Thanks, guys. We'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Just wanted to pull up the dollar here. This is our weekly view on the U.S. dollar. And we talked a lot about the 95.5 general area. And we had a close below there last week. We're coming back up into that area. So what do you do now? Let me just blow this up a little bit. You know, I'm not so convinced that it's over for the dollar, but this type of action, I'm not saying it's over for the U.S. dollar. I'm just saying you know what I'm trying to say. It's a pretty serious rally and had a pretty long extended trend here. And this is our weekly. So, I mean, this has been something that's really, been in force for a long time. But as we come back up into this 95.47, let's just call it 95.50, and we've got something a little bit higher, 96.14. So you got about a 65 cents range there that we've just got to get through to really think about buying the dollar, in my opinion, again, in any kind of just getting your toe in the water, whatever you want to call it. It kind of was interesting last week when we had this profile appear above price action, let the market come to us. We always talk about just, wait patiently. You don't have to be in the market all the time. We had a high of 96.09, and that inflection point is 96.14. So we kind of came up there and kissed it, and that was nice. And then we got the super confirmation below 95.50, and then you kind of were able to hear that whoosh sound as if quite a few folks had to start covering. I don't think it's over on the upside, but I mean for the longs, but we may use this DMZ, if you will, to just kind of drift a little bit lower. We kind of closed below, gone back and retested. We got some things pointing in our favor on the short side right now. And I think 94 could easily get revisited and maybe even lower before we even try to make an attempt to clear 96.14 again. So that's kind of my stance on the U.S. dollar right now. And that's the daily view. And then here we got to go back just for 2 seconds here on the weekly view. So those are the numbers that we want to pay attention to. And those are the Maginot lines, if you will, for the U.S. dollar. Now, as we talk about the U.S. dollar, we've got to look at a couple of commodities that, to some degree, are usually reactive towards dollar changes. And one of those is crude oil. This has got a lot of different factors going on with it lately. Let's see if I can get it to come up here. And here's the situation on crude oil. Now, if you've been watching this show, we've been, let me just pull up our weekly here. We've been pretty longish on crude oil for a while, and that was when we started breaking above the borders around 48, 49. We really got some deeper convictions that it was okay to get back in the water on the long side. And then when we cleared 56.14, we talked about this kind of consolidation above and move higher. So, what do we do now? We had a pretty big, pullback last week off of the highs. Those highs were 62.58. We reached a low last week of 58.14. So we're trading 59.53 as of the time of this report, and we're going to kind of look at that as we're still above 56.14 on the long term. We broke stride, and we got to where we consolidated above profiles for the first time in a very long time. This is our weekly view again. Let's go into our daily. So, we talked about support was going to have to be 59.90, and then we were going to have to call it quits until like maybe 56.14, 56.17, which is maximum support down here, that weekly unfair high and the current daily unfair low. So right now, We closed below, got into the balanced area of our daily. You know, I don't dislike the way this is looking down here, and how we kind of reversed when we reversed based on some of these things in Navigator and showing divergences. You know, we've got a 59.90 up here. I actually think you could possibly be looking, since the long-term trend is up, looking for breakouts again above 59.90, and any pullbacks into 56.17, 56.14. I think you got to be looking at that as just super ripe opportunities to buy. So, you know, what do we do in the balanced area here? Do I think we can trade this down and explore the entire fair auction? That could happen, but I mean, I'm just kind of patiently waiting. I'm not really interested in shorting this product, so therefore I'm not looking to put stops above 59.90 and trading this from the short side right now. I'm looking to, again, to buy breakouts and buy support. So there's really nothing to enact a transaction on right now, considering that situation. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Every time I hear the Nico and Paige ads, I want to eat good, be healthy, and stop procrastinating. They really got some really cool stuff that they talk about on that show, and I'm impressed with what they do. I tell you what, a guy that listens to the show, Harry, I'm not going to mention his last name, had sent me something that was along the lines of health that has just been an eye opener. Some information on that Dr. Neil Barnhart, I believe the guy's name is, that had just really collected data on some of the things that surround dementia, Alzheimer's disease, forgetfulness, whatever. And it was a couple of things on YouTube, and they just alerted me to it, and really makes sense. And it's almost like there's no downside. I mean, I always look at where's the risk. There's like zero risk in doing some of these things, and that basically means eating the right foods, being able to reverse some of these things, being able to get the right attitude, I guess, on how you attack fueling your body. And some of the things that I've done. I mean, I'm from North Carolina. There's nobody that ate worse than me. I mean, I wake up, eat a half a stick of butter, a bowl of grits, 5 eggs, and a pound of bacon. I mean, that's just it's just there's no excuse for something like that. But word to the wise, Neil Barnhart, and was really impressed with some of the videos that he had. I wasn't trying to sell anything. It was just displaying some facts as far as data go. So Nico and Paige's show is on Fridays at noon Eastern time. Living a Primal Lifestyle, a really cool show. I never even have spoken to them directly, but I admire what they do, and hope you guys will get a chance to tune in. It's a nice segment. Let's take a look at the XLE. Okay, so as we talked about crude oil, this is kind of interesting. I wanted to show you that my thoughts on crude oil is I don't think it's over. I know we had a heck of a run. And bacon fat with coffee, you know what that is, right? That's called red-eye gravy. So there is a way to mix those two things together. 80's that unfair high on the weekly, and that's kind of, again, we always talk about where's the maximum inflection points, for trying to, leverage the trade, so to speak. So as we look at the crude oil trade, 80.07, we've bounced. Let's see, last week we reached the low of 79.84. So overshot it. What is that? 15 cents? No, it's 16. My math. I'm getting dementia. 23 cents. We overshot a really serious inflection point. And then we just, have just powered away from it. That's what you want to see, by the way. You want to see prices and action not want to hang around those inflection points. Now, if we just continue to settle back and just kind of compress down into that area, that's going to be a little concerning, because we are kind of reversing and not wanting to get clean and clear of these areas. If you hear a siren in the background, that's the theme of the Philippines here. So 80.07 weekly unfair highs. Here we go. So let's keep drilling down. And as we can see now, we've kind of gotten clean and clear, which gives me even deeper conviction on the long side of the XLE, 80.87. So again, this has been a little bit easier trade than the trade in the crude oil. Terry, I hope are you joking? 80.87, just getting clean and clear of 80 and basically 81. So now we're looking at that DMZ as somewhat support on the XLE. And again, I'm looking for some help from crude oil to truly drive this thing even farther north. That's the way I'm looking at those two products. But let's continuing to cover some of the usual suspects, especially some of the dollar-related situations. Let me get into some folks' favorites here. Gold. This is one I just got to stay away from right now. I mean, you're just not given anything really to hang your hat on. There's, we caught a good bid the other day that was pretty short-lived. We talked about taking it off around the 12.15 area. Thank goodness we did. But right now, you're just churning and kind of burning within this latest profile. And if you look down at our navigator, we have just basically gone flatlined. And, does that mean we're going to eventually, race away from these areas? Yeah, but, when and if we race away from these areas, we're pretty much going to have to break stride from the 1173 to 1210 new balanced area. And it's just, unless you're day trading this and you want to kind of, and I'm going to show you this, unless you want to get down into some lower time frame profiles, these are obviously situations you can pay attention to if you've got our scanner. First of all, thanks, but we're going to go into our futures world. And to me, this thing just runs my life. Here's gold. And here's those inflection points we talked about. As you can see, we're currently breaching the 1189 area. This is real-time coverage. This is a build actually that we've put a heat map even into the colors on the screen. So when we're darker, we're kind of farther above profiles. Lighter means we're getting right almost down into the inflection points. As you can see, natural gas sitting, to some degree. Let me just pull this up. Well, here we go. As you can see, getting close to those inflection points. That's why we're those lighter colors there. But let's go into the ETF world here, and let's talk a little bit about. I'm sorry. Excuse me. We were going to talk a little bit about gold here, just a little bit farther. So before I get off on another tangent, so. As we look at the 60-minute, I mean, you've got trading opportunities, busting away from these profiles. But, I personally like to hang my hat on some of these longer-term inflection points, and that's where I feel like the probabilities are a lot more so in your favor. Now, have we had a good run in gold today? Yeah, we've had almost a $10 run from, $8 run from, the last 2 hours. And can you make money on things like that? Yeah, but there's a lot of noise in those smaller term time frame charts, and we want to, in my opinion, try to give you things that you can hang on to during the day, during the week, hopefully during the month, and sit back and a broker used to want to kill me because that we dealt with. He says, man, he goes, you give everybody every reason in the world not to trade, but he meant like trade suppressors. He used to call them. And as a broker, as you know, those guys make money off transactions. So, we just kind of continue to preach. And it's a statistical fact. The more you trade, the less likelihood it is to make money, chances are. And I know there's prop shops where guys are doing like 1,000 trades a day and things like that. That's a little bit different environment. But for the layperson, and especially on commissions. Now, those guys in prop groups have those guys in prop groups have basically, they're paying like zero exchange fees because they've got memberships in those groups, and their commissions are usually a nickel a side on the futures or less, if you can believe that. So they're all in per side. Let's just call it 3 cents. If you can believe that, that's true. Because when you get into buying, you know, you used to buy the IOM seats and the different, there was like 7 seats, and it was a long time ago. Well, when I say long time ago, late 90s, early 2000, you could kind of get all that coverage for about $3.5 to $4 million of purchasing those seats, those 7 seats, and then being able to sit back and what they do at that stage was, you know, if you made that investment in the exchange and you basically did that because you were going to come to work every day and start spinning tickets in a large way with all your traders, they would give you a $50 a day cap on exchange fees for the entire firm. Now, can you go out and farm that out to, you know, set up a website and go, hey, you know, put money with us and in our prop group, and you can trade away, and we're only going to charge you, you know, whatever, $1 a side or something like that. No, you cannot do that, because the Merc did not design that program for situations like that, for you to take advantage of their good nature and will, if you want to call it that, towards you for purchasing the seats. So, but there are, believe it or not, there are some electronic memberships. If you trade futures a lot, and there's no downside to this. There were 106R, 106H memberships, electronic memberships, corporate memberships, that you basically form a corp. And I think they call it something else now, but you basically form a corp. You go to the Merc, you fill out a 1-page application, and they're going to cut your exchange fees in half or less, just because you're treating it seriously. You've got an electronic membership. And you know, it's if you trade futures at all to any degree, you might want to take a look at that, because, you know, those exchange fees based on your membership, and you know, open your brokerage account, the clearing firm is going to ask, you know, what type of participant are you? Are you a retail participant? Are you a corporate membership participant? Blah 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 blah. And, you know, you're going to identify yourself as that corporate, you know, LLC 106R, H, whatever you want to call it, membership, and you're going to trade for basically half the exchange fees at that stage. And it's literally stupid, in my opinion, not to go down that road if you trade enough, because you're just throwing money out the window if you trade futures a lot and you don't do that. So I don't know, you know, it's not a secret. You can go to the Merc's website and kind of explore it. All right, let me see what I missed here on the den really quick. Nope, nothing good. Just kidding. Here we go, guys. All right, so we've taken a look at gold. We're going to go back into the world of the euro. And, you know, we talked about after we crossed the 110.5, 111, it was not okay to be short anymore, and thank goodness we took that stance. We talked about it. It is extremely possible to get up into the 115.34 area, and we actually would hope that would happen, to get off some massive short positions up there with stops above. And let me blow this up a little bit so you guys can see this. So, you know, we kind of got up here, we rattled around 111, 110.5. Remember, close above, consolidate. Let's see where we're at today. Lows 111.33. So you got a little bit of room there left to kind of touch into that DMZ. But again, it's not okay to be short here, in my opinion. And you've got the daily sitting here. You had this profile up here below about the same time we came back and retested this area. And then like we were sitting on a launching pad. But, you know, what do you do now? Still nothing to hang on to here. No new supply happening above. You've got those weekly inflection points to pay attention to around 111 down into 110.5, and that's kind of letting the market come to you. In my opinion, as fundamentally bearish as I am on this particular currency, you can't really go in there and back the truck up on the short side until we either break down or rally into those resistance areas. Okay? British pound, we're going to hit that for a little bit because, you know, the Tory situation, the elections, you know, this is, you know, nothing to short right now. Nothing to short. 154.41, new unfair highs, breaking above. Here's our 240s. Add this to kind of regulate that situation up. I think this thing's still got some legs in it. So beware of thinking this thing has gone too high. We've, you know, I mean, this week, believe it or not, I mean, this is first time. Well, we had a little bit of a breakage up there before, but reversed. This is compressing higher, consolidating higher. This is a little scary for shorts. Let's stay away from it. Okay. All right, so we're about 45 seconds away from the break here. I want to pull up IBM. I get emails about this all the time because I was the guy who came out and said that fundamentally this company's got a lot of problems. And then when we kind of were able to short this thing, we kind of had to stay away from it above this 164.29 area. Thank goodness the profiles told us it was not okay to be short and okay to be long there. I really passed on the longs. We squeezed a lot of juice out of this stock on the short side, but now that we had this new profile, we talked last week about possibly not buying the bounce here. I was trying to wait for a breakdown below 169. That didn't happen. And right now, you're right in the middle of the bounce area on this, and there's still nothing to do, in my opinion. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. You know, somebody asked me how long I was in Chicago. I was up there for a while, off and on, also after I left. But I was telling some people in the den that you know, it's a great place to go visit. Chicago is a very friendly town, believe it or not. I mean, you hear all these crazy stories. Those are kind of the other side of the track stories. If you get downtown on the Loop, man, just really nice Midwestern attitude people. You can obviously gain some weight there. There's some great food. The best food in the world is in Chicago. And when you're in the Board of Trade, if you go to visit there, there's a Series Cafe downstairs, and they will. First time I went there, they order vodka tonic. They sit down the glass with ice in it, and there's some liquid in it. And they sit the Schweppes can beside you. I was like, oh, cool. It's like the airplane. They kind of give you the rest of the thing, but that wasn't the case. The Schweppes can was actually full of tonic water, and the glass was completely full of vodka. And that's the guys getting out of the grain pits early there. I used to just laugh my heads off. We'd go down there at 1:30, 2 o'clock, and there'd just be people like it was 10 o'clock at night, just yipping it up in that place. It was kind of an amazing time. All right, so enough of that. Let's take a look at Tesla. All right, TSLA. Here we go. As we look at Tesla, you know, this action that happened on Thursday was, kind of interesting. The announcements that came out, and we talked about 224.79, and when we talked about that pre-market, and what side of the fence it was going to go on, and obviously north side. But what do you do with this now? 236. They've actually got some fundamental news out about the batteries, and they're probably going to end up. They think the revenue stream off of that is north of 800 million. Off those alone, they've got some great proprietary information on those batteries, without question. But if you're trading Tesla, it's not for the faint of heart. Here's the situations: the 235.06 on the 240s, and then you got that 224 big time number down below. That's on the 240s, the dailies. So that's kind of the uncle point down below there. If you're trading Tesla from the long side, in my opinion, the market is not going to have a lot of relevance on this stock. It's very news driven, as you know. All right, so had quite a few of emails about that. Should they stay in it? Should they trade the bounce? Should they continue to stay long? Again, use the 240s on the scanner to try to regulate that. Let's just sum up with the S&Ps here. I still think this is kind of a bull crap move up, and I don't say that too often. I'm saying it based around these things that we look at here when I go into my indices and I look at where my S&Ps are breadth-wise. We're just literally, I'm going to pull this up so you can see it. I'm going to go in here. I want to pull up our daily breadth here. This is the thing that's kind of kept me away from this on the long side and allowed me to get short when appropriate. We've been churning breadth without any real direction all month and even farther back. And as we've drifted up, it's been kind of scary to, let me see if I can snap this again here. Sorry, guys. It's been very, very scary to try to, play this from the long side because these long areas have really been underserved as far as, breadth cooperation with those moves up. And I'm still not convinced at all that this is a breakout to buy, and still looking for short opportunities. And those short opportunities will be looked at based around these inflection points and the stories being told in these paragraphs that we have. Guys, hang around. Steve Rhodes is next. He's awesome. Stay tuned to TFNN all day. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.